Amid the hustle and bustle of financial markets, a few voices can penetrate the fog and foresee the future. Analyst Adam Sharp is one of them. In a series of his past analyses, he accurately described the market crash in 2020 as a beautiful buying window for precious metals and continued to be optimistic about silver, judgments that have now been confirmed by market trends. This is not accidental, but based on a deep insight into the powerful driving forces hidden deep in the market. The forces identified by Sharp are now converging into an unprecedented force, pushing silver to the forefront. The current silver bull market is not a random speculative frenzy, but a perfect storm, formed by the intersection of three powerful trends. The current market structure and pattern are strikingly similar to the past era of dramatic changes in the monetary system and high inflation. The script of history seems to be repeating itself. On the one hand, emerging industries represented by green energy and artificial intelligence, AI, are giving rise to a structural, irreplaceable and unprecedented demand for physical silver. On the other hand, with the global legal currency credit shaken and the central bank's policy direction unknown, capital is undergoing a great migration to escape from paper money and seek real value. The content of these issues will lead you on a journey of in-depth exploration. We will first travel through time and space, return to the era full of conspiracy and passion, and relive the legendary story of the Hunt brothers trying to manipulate the silver market. Then, we will redeconstruct the subtle and critical relationship between silver and gold. Then, we will deeply analyze the core engine driving this round of bull market: silver's dual role in the modern industrial and monetary system. Finally, based on rigorous analysis, we will make specific predictions on the future price trend of silver and point out clear and feasible investment directions for investors. Let's start with a legendary story, the ghost of the silver market, the story of the Hunt brothers and the lessons of paper silver. To understand the potential of silver today, we must first start with its most dramatic historical chapter. The protagonists of this story are the sons of three Texas oil tycoons, Nelson Bunker Hunt, William Herbert Hunt and Lamar Hunt. Their story provides the most profound lessons for all silver investors today. The United States in the 1970s was in an era of great turmoil. In 1971, President Nixon announced the decoupling of the dollar from gold, which completely ended the Bretton Woods system and the world entered the era of pure legal currency. The dollar, freed from the shackles of gold, was like a wild horse running away, and its purchasing power was constantly eroded by the continuous inflation. By 1979, the inflation rate in the United States had soared to an astonishing 14%. In the panic of wealth being legally diluted, ordinary people and discerning investors began to frantically look for hard assets that could preserve value. So, their eyes naturally turned to gold and silver. This wave of seeking hard currency was a bottom-up, widespread grassroots movement, and the Hunt brothers were just the most eye-catching participants. The Hunt brothers were convinced that silver was criminally undervalued in an era of paper money. In 1970, when the price of silver was only around $1.50 per ounce, they began to quietly build a position. At first, they just bought a large number of physical silver bars and stored them in a vault. In order to transport their wealth out of the United States, they even chartered a Boeing 707 and flew tons of silver to a Swiss vault under the escort of armed ranch cowboys. Then, in order to amplify their influence, the Hunt brothers set their sights on the silver futures market on the New York Mercantile Exchange, COMEX. They used leverage to buy a large number of silver futures contracts, and unlike most speculators, they chose to accept physical delivery, further draining physical silver from the market. By 1979, the Hunt brothers were estimated to have controlled about 100 million ounces of spot silver and a large number of futures contracts, equivalent to more than one-third of the world's privately held silver supply at the time. Their actions, coupled with the public's panic about inflation, detonated the market. The price of silver soared from about $6 per ounce at the beginning of 1979 to $25 at the end of the year. The market went completely crazy, and ordinary families began to rummage through their boxes and melt their own silver tableware to cash in. Jeweler Tiffany even published a full-page advertisement in the New York Times to publicly condemn the Hunt brothers' hoarding behavior. By January 18, 1980, the price of silver reached a historic peak, close to $50 per ounce. The market frenzy aroused the vigilance of regulators. On January 7, 1980, the COMEX exchange took decisive intervention measures and introduced an emergency regulation later known as Silver Rule 7. This rule greatly increased margin requirements, and most fatally, it stipulated that traders could only sell or close positions, but could not buy new long contracts. This was equivalent to cutting off the funds from the bottom of the pot, instantly cutting off the capital chain of the Hunt brothers to maintain and push up prices through leverage. The liquidity of the market suddenly dried up, and a stampede-like sell-off began. The Hunt brothers faced an avalanche of margin calls, and even though they were rich enough to rival a country, they could not fill this bottomless pit. On March 27, 1980, the Silver Thursday, that later went down in history, the Hunt brothers finally failed to pay a margin of up to $100 million. The market collapsed, and the price of silver plummeted from over $21 to below $11 in just a few days. The Hunt brothers lost billions of dollars in this disaster, and were eventually forced to file for bankruptcy, and were convicted of illegal market manipulation by the court in 1988. People often blame the Hunt brothers' failure on their greed. However, this view is too superficial. After in-depth analysis, we can get a conclusion that is more instructive for today. The Hunt brothers' core judgment, that silver is an important hedge in the era of inflation, is completely correct. Their failure did not stem from their belief in silver, but from their methodology to achieve this belief. They relied too much on paper silver, i.e. futures contracts, a highly leveraged financial derivative traded on exchanges. They mistakenly thought they could control the market, but ignored a fundamental fact: the exchange itself is the rule maker. When their behavior threatens the survival of other members of the exchange, mainly the short side, the exchange can, and does, modify the rules at any time to protect its own interests. This historical lesson provides the most fundamental guidance for today's silver investment. A real run that cannot be easily manipulated cannot happen in a paper market where the rules can be modified at any time, but only in the physical market. When millions of investors are no longer satisfied with paper promises, but demand real, touchable physical silver, no force can create supply out of thin air. As the analysis of that year pointed out, the next silver storm will be driven by countless individuals pursuing real wealth, rather than a leveraged game of a few players. This ups and downs in the price of silver took off on the east wind of the macro environment, reached a climax under trading manipulation, and finally collapsed under the stick of the rule maker. Let's briefly review the timeline of the story, from 1970 to 1988, hoping to get some inspiration from it. From 1970 to 1973, the Hunt brothers began to buy large quantities of physical silver at low prices. The price range was $1.50 to $2 per ounce. In August 1971, President Nixon announced the decoupling of the dollar from gold, and the Bretton Woods system ended. In 1979, market panic and the Hunt brothers' purchases jointly pushed the silver price up from $6 per ounce to $25 per ounce. On January 7, 1980, the COMEX exchange promulgated the Silver Rule 7, restricting long positions and raising margins. On January 18, 1980, the price of silver reached its historical peak, nearly $50 per ounce. On March 27, 1980, Silver Thursday, the Hunt brothers failed to meet margin requirements and the market collapsed. The price fell below $11 per ounce. In 1988, the Hunt brothers were found guilty of market manipulation by the court and declared personal bankruptcy. This timeline clearly outlines the context of the crisis, highlights the key turning point of the exchange rule change, and provides a solid historical basis for us to understand the inherent risks of paper silver. Okay, let's stop here and continue next time.